Welcome to the initial, very first Year Trader podcast, where you can follow an everyday investor turn your paycheck or my paycheck into a high performing portfolio. I'm Steve, and I'm not a certified financial advisor, just an everyday trader sharing my journey. So, if I misquote something or my analysis isn't complete, that's okay, because this is simply my way of looking at things. However, if you decide to invest based on anything I say in any of my podcasts, that is on you. And of course, you should consult a professional. With that little disclaimer out of the way, what is my goal here with this podcast? I plan or hope to beat the market by 3 times year over year by picking high growth stocks that analysts believe will double in the next 12 months or nearly so. I'll take some variances of that. So I'm not always going to pick a stock that they say will double, but high growth potential. So there's a lot of risk with that. There's several ways for that to go south. A lot of those picks, companies will not be profitable when you pick them or I pick them, and that's just risk. The company could offer an IPO that dilutes the value of your stock. I mean, there's all kinds of ways that can go south. So just be very, very careful and consult a professional. But unlike day traders, I am the year trader. I'm going to buy a stock and hold it for a year. I might punch out a little early, let's say 6 to 9 months in, if the stock doubles and hits the target early. That makes sense. Or if it's tanking so bad and I don't think it will ever recover, we have to exit on a loss on that position. So anyway, so what will I be doing? Each paycheck that I make, I get paid every other Friday. I'll invest $200 using the Robinhood app. Every month, I'll share my picks, progress, and lessons learned. We'll focus on growing markets like space exploration, crypto, AI, robotics, and innovative companies like Tesla. And so I will make my picks live, meaning I'll inform you of my picks before I make them, except for on this show. I've already picked a few, but in general, I will stay what I will be doing with my $200, my $400 for that month. And before I do them, and then every month I will, at the beginning of the show, I will go back and say, hey, back in January, I picked this. I bought $50 of that, and now it's worth $57 or whatever the case is. So I'll just track it live as we go. So, okay, so getting back to the trading app Robinhood, what's nice about Robinhood is that you can incrementally invest even as little $10, $1 every paycheck, whatever. Instead of the $200 I will do. You can also purchase incremental stocks, meaning you could buy $10 worth of Tesla, even though Tesla stock is trading at several $100s. So let's say it's worth $400 and you buy $100 worth of that. You'll just have a quarter of a share. No big deal. Robinhood takes care of that for you. It's just called owning a fractional portion of the stock. Full disclosure, I have no financial interest in Robinhood. I just decided to use that app because it is rated well and has a somewhat easy to use interface. You can use whatever app or service you desire. Lastly, I get most of my technical information, current price, targets price, out in a year, number of analysts who have done that from Yahoo Finance. So if you want to go verify what I've state in these podcasts about individual companies, that's where I'm going to get 95% of my information. I'll try to call out when I use a source other than Yahoo Finance. I can say that in this particular podcast, it was 100% Yahoo Finance. So anyway, my approach here is to focus on stocks that at least 3 independent analysts project at least 100% growth in the next year. I'll try and avoid some pitfalls like binary event stocks, where, for example, a biotech stock is expected to double if a binary event, like an FDA approval for a trial on a new drug, would drive that evaluation or prediction. So, I also got to tell you that on the other hand, I have my personal biases, and so those will come out here, and I just want to let you know what they are. I have a bias towards the growing space, infrastructure, and AI markets. So I'm going to start out with those markets. And today I'm actually going to talk about AI. But in any event, you'll see me focus more on tech stocks. I'm a software engineer by trade, and I will break down why they're interesting to me, what risk I perceive they carry. That may not be the full set of risks. Do your own research, as they say, and how they fit into my year trader strategy. Also, just to let everybody know, what if the market drops 30% in a year, right? So my plan, if there's a big market drop, is to stay consistent, keep investing, and focus on sectors with long-term growth potential. By dollar cost averaging and targeting high growth plays, the goal is to still outperform the average market return. So if you are new, dollar cost averaging is a strategy to beat downturns where you incrementally purchase stocks consistently, which is exactly what I'm going to do here at the Year Trader. So if a particular stock goes down and we're still bullish on it, then I'll jump in and buy additional shares of that stock. Remember, if the market takes a 20% digger and all the stocks take a hit, but the target price does not change, that stock just got cheaper relative to the target price. So it's an opportunity to purchase at a lower and get more gain. Buy low, sell high is what they say. So if along the way, and I think I mentioned this before, let's say 6 months into a purchase, it isn't turning out, I'll pivot. And if along the way we double our money early, I'll pivot at that point too. As they say, it all depends. So thanks for joining me on this journey. Remember, I'm not a financial advisor. This podcast is for fun. You can watch what I'm doing. We'll report progress, like I said. And when I post each show, I'm going to have a spreadsheet of all the buys and everything that's happening. So you can go out there and see what's happening. So anyway, let's get going. My podcast will be organized into 3 segments. 1 is called accountability, 2 is called analysis, and 3 is picks for the month. In the accountability section, I'll go over how well my prior picks are going. In the analysis section, I'll go through a number of stocks chosen for this particular podcast to look at. They'll usually have a theme, like today's theme is AI. And again, I'll be looking at stocks with over 100% growth targets year over year. Each month, I may choose a new market. Like next month, I'll probably do space infrastructure. And then after that, crypto. And then maybe I'll come back to AI and maybe we'll buy some more. I don't know. We'll see how it goes. It is a journey. So there you go. So as I go through the analysis section of stocks, that's this second segment of the show, I'll promote stocks to the quote finals. And what that means is I'm at the final in the final segment of the show, the picks for the months. I'll look at those a little bit differently and decide, no, I don't really want this one. I'm going to spend on these 2 or whatever the case is. So that's how this podcast will roll. And so for section 1, the accountability section, there's nothing to account for right now because I haven't purchased anything. Now that's a little bit of a fib. I wrote this script for this podcast about a week ago, and I purchased stocks right after I wrote this. And so I'll talk about that at the end, and I'll tell you the purchase date. But moving forward, additional purchases will all occur prior to a podcast. So here we go. Today's focus is, and now let's move on to the analysis section. Today's focus is the AI industry. I've done some research and compiled a list of AI stocks that analysts predict will at least double in the next 12 months. The list was actually a little larger than what I'm going with. I discounted some quickly just because they were not, I don't know. I did an initial pass to come up with this list. I'll just put it that way. And some of those stocks just didn't look promising. So I didn't even want to spend time talking about them. But the list that I'm going over today, is Airship AI Holdings. Its symbol is AISP. Rekor Systems. Its symbol is REKR. Resolve AI Limited. Its symbol is RZLV. Synge Incorporated. I hope I pronounced that correct. It's spelled CYNGN Incorporated. Its symbol is CYN. IREN Limited. Its symbol is IREN. Nightscope Incorporated. Its symbol is KSCP, and Neuro One Medical Technologies Corp. Its symbol is NMTC. So let's get going into diving into these companies. Airship AI Holdings, symbol AISP. So AISP builds, or Airship Holdings builds AI-powered surveillance and data management platforms that help organizations structure, analyze, and visualize large volumes of video, sensor, and unstructured, quote, unquote, dark data at the edge. It currently has 161% growth projection over the next year. AI Holdings provides AI-driven data management. It provides platforms that process and analyze data at the source, called edge computing, using trained AI models. It focuses on turning unstructured dark data, like video feeds or sensor inputs, into structured, actionable insights. Its core products one's called Outpost AI. It's an edge-based system that structures and analyzes data directly where it's generated. They've got a product called Acropolis, which is an enterprise management software with two main versions, Acropolis Commercial and Acropolis Law. The commercials for schools, hospitals, casinos, logistics companies, and retail, and of course laws for law enforcement, defense, and intelligence sectors. And they've got an Airship Command product. It's visualization tools that allow customers to interact with their data and devices in real time. The industries that they serve is both public and private. In the public sector, they serve law enforcement, defense, and intelligence agencies, and in the private sector, they serve healthcare, education, logistics, retail, and gaming, or casinos. Airship AI Holdings is not yet sustainably profitable. While the company has reported occasional positive net income due to non-cash gains, its core operations still run at a loss, with the revenue too small to consistently cover expenses. In this latest quarter, gross revenue was $2.1 million and its gross margin was 71%. But even with strong gross margins, high R&D costs keep the company unprofitable, and quarterly revenues swing between $1 and $2 million, far below the scale needed for consistent profitability. So this one, I do not. I decided not to promote it, if you will, to the finals or consideration. So I'm not going to purchase this stock. The next company we're looking at is Rekor Systems, symbol REKR. They develop AI-powered roadway intelligence and public safety solutions. The company builds software and hardware platforms that help governments and businesses manage traffic, enforce laws, and improve urban mobility through real-time data and analytics. Rekor has 128% growth projection in the next 12 years. And in this case, there was only one analyst that made that, so I usually pick for three, but I kept this one in. There's times when I'll bend the rules a little bit, but anyway, I'll continue on, but I did want to note that for you. Rekor provides transportation management. They have a platform for traffic operation centers to monitor and manage roadway conditions. It provides real-time insights into congestion, incidents, and traffic flow. They provide urban mobility, and what they mean by that is they are focused on city planning and mobility analytics. It helps municipalities, easy for me to say, optimize traffic patterns, reduce emissions, and improve commuter experiences. They serve the public safety. They have AI-driven vehicle and license plate recognition systems used by law enforcement, and this enables faster identification of vehicles linked to crimes and violations. They assist with compliance and enforcement through cloud-based financial management for contactless compliance, e.g. tolls and citations, and they automate the billing and the collections for municipalities that employ their systems. And vehicle intelligence. They have AI-based vehicle and license plate recognition technology for commercial use. So risk and considerations with this company. Revenue, they're still a small cap company with revenues under $20 million annually. They have a high reliance on government dependency. They rely heavily on municipal and state contracts, which can be slow moving and politically influenced. They do have competition. They face rivals in AI traffic management and public safety tech, i.e., Motorola Solutions and Palantir. Recourse Systems is not yet profitable. The company has narrowed its losses significantly in 2025, so they're trending well and have improved their margin, but it continues to report net losses despite strong revenue growth. In terms of their government contract dependency, much of its growth comes from the state DOT or Department of Transportation contracts. They have contracts in Georgia, California, and Texas. And so shares surged 56% in Q3 of this year. Then they later fell 19% in November, showing investor caution. Anyway, Rekor is transitioning from hardware-heavy sales to higher-margin software as a service and data as a service sales, but this shift does take time. So the 128% year-over-year growth target for Rekor Systems, as reported by Yahoo Finance, is driven by that analyst expectation of accelerating revenue from statewide Department of Transportation contracts, margin expansion, and a clear path towards profitability. Risk and trade-offs of Rekor. So Rekor must deliver on large DOT contracts without delays or cost overruns. Only a handful of analysts cover this company, so consensus targets are typically volatile. And while losses are narrowing, Rekor is not yet profitable and timelines could slip. So that all said, it sounds bad. This one's interesting to me. With large state contracts in only a few states, they look positioned well to press into other states. And they understand the state acquisition process, which is complicated and slow. But I'm positive on this stock despite some of the challenges. So I will promote this one, and we'll talk about it in the final segment of the show. Moving on to Resolve AI Limited, they develop generative AI solutions for the retail and e-commerce sectors, helping brands and manufacturers create dynamic, personalized connections with consumers across devices and locations. It's like, what the heck is that? I'm not even sure. I'm not a retail guy, so those words don't mean much to me. But anyway, they provide AI-powered platforms that enables retailers to deliver personalized shopping experiences. Now, I understand what that means, so we're getting warmer. And so they use machine learning to analyze consumer behavior and generate tailored offers and recommendations and engagement strategies. They have tools that help brands build real-time and location-aware connections with customers. So if they walk into a store that's using their products, the store is aware of the individual and some history data about that individual so that they can engage that customer in a personal way. If they focus on multi-channel engagement, so it's just not in the store, it's mobile, it's on your phone, the web, in store. It's one of these companies that follows you around. So that could be creepy or kind of against what you think is right. But anyway, they offer scalable AI solutions that integrate with existing retail systems. So in terms of risk on this one, they're still scaling its AI platform with relatively small revenues. They face strong rivals, so Salesforce, Adobe, and Shopify. So those are big names. And their adoption curve. So success depends on widespread retailer adoption and integration into consumer-facing platforms. Resolve is not yet profitable. And although they've had rapid revenue growth and strong margins in 2025, the company continues to report operating losses as it scales its AI platform. Let's see, what else do we know about this company? I'm kind of going over a sheet here. They reported 70 million ARR in August 2025. That's up 182%. And revenue growth is 6.3 million. That's up 426% year over year. They've secured some major enterprise contracts, including a $9.8 million deal with Liverpool, which is Mexico's third largest retailer. And their gross margins are 82 to 95%, which is far above industry average. So it demonstrates the scalability of their AI, commerce model. So profitability here, despite high margins, they've not achieved profitability in the last 12 months. Their adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization, is a negative 17.7 million, showing ongoing operating loss. What else? But that all said, their target price is 289%, so almost 3 times it's expected to go up in 12 years, and driven by analyst expectations. So the upside target is fueled by their rapid growth, their high margins, and enterprise adoption of its generative AI commerce platform. Analysts believe Resolve is at an inflection point where scaling contracts and global expansion could rapidly transform it into a major retail AI player, but profitability and execution remain critical hurdles. I am intrigued by the growth potential on this one. It sure looks like a stock that's at an inflection point. So I think it's worth promoting into the finals for our final analysis. So I will do so. Moving on to CYNGN, C-Y-N-G-N, Incorporated, symbol CYN. Its current price is $3.64. Its target price is $12. That's a 229% upgrade. Now, this company, because it's so small, also only has one analyst. So, but anyway, what do? They develop autonomous driving software for industrial and commercial vehicles, enabling automation in factories, warehouses, and logistics operations. They have autonomous driving software that can be retrofitted onto industrial vehicles like forklifts and tuggers and stock chasers. They have customer-facing analytics platform for monitoring and managing autonomous fleets. And they have an internal AI training infrastructure that continuously improves algorithms and validates new releases using simulation frameworks. They focus on factories, warehouses, and logistics centers where automation can reduce labor costs and improve safety. Vehicles equipped with their products can operate autonomously in structured environments, moving goods and materials without human drivers. And so, what are the risks with this company? The revenues remain very small. They're under $1 million annually, with net losses exceeding $20 million. They face competition from Auto Motors, Seagrid, and larger robotics firms. And they face a hurdle of industrial customers may be slow to adopt autonomy due to concerns of safety, which it's supposed to improve. But initially, if their forklifts start crashing into rows and rows of inventory, obviously that's bad. What else can we say? Their revenue has grown a lot, but it's basically grown from nothing to very little. So that stat doesn't mean much to me. Their earnings improved to negative $2.70 a share. It was about twice as bad as that before. So it's trending in the right. Their cash position is that they have $32 million in capital. So they've got operating expenses through 2027. So that's nice. They have a tiny revenue base, as I mentioned. I'm looking through the sheet here. And so even though they have operating cash for 2 years, I simply don't have the stomach for this stock. Maybe you do. 229% is exciting. However, it's only... I don't know. It just seems to me like their revenue is just so low that I don't know. There's no risk, no return. So maybe this one's for you, but it's not for me. So I'm going to pass on it. Let me move on to IREN Limited, symbol IREN. It stands for Iris Energy Limited, is the sustainable Bitcoin mining and AI infrastructure company. So it's not only, it's in the crypto world and the AI world, so that's interesting to me. Develops and operates large-scale data centers powered by renewable energy, primarily hydroelectricity, and has recently expanded into high-performance computing and AI cloud services. That it has a 104% year-over-year price target. And so that's why it caught my eye. It has some strategic partnerships. It signed a $9.7 billion with a B dollar AI deal with Microsoft, and they will deliver AI-cooled infrastructure to Microsoft. And this deal positions IREN as a major hyperscale data center provider, diversifying beyond crypto mining. And analysts have forecast $250 million in annualized AI cloud revenue by late 2025, a new revenue stream that reduces reliance on Bitcoin mining. I'm not sure that actually happened. So, it has a Bitcoin mining capacity. It operates. They're one of the largest miners globally. And with Bitcoin's price recovering in 2025, mining margins have expanded, boosting profitability there. So the company has completed a $3.6 billion capital raise to fund new AI and mining infrastructure, and analysts view this as a sign of aggressive scaling and confidence in future demand. The 104 upside target is fueled by optimism around its pivot into AI cloud services and its landmark Microsoft deal. Layered on top of strong Bitcoin mining economics, analysts believe this dual-engine model could transform IREN from a volatile crypto miner into a diversified tech infrastructure powerhouse. But execution and market cycles remain critical risk. In its most recent earnings report, the company posted positive net income and beat analysts' expectations, reflecting strong growth in both its Bitcoin and mining and emerging AI cloud services. IREN has some big-name investors, including Jane Street, Wells Fargo, Citigroup, Two Sigma, and Morgan Stanley. This one looks like a winner to me, so it definitely is in the finals. Moving on to Knightscope Incorporated. It's got a 229% upside target. It designs, manufactures, and deploys autonomous security robots and emergency communication systems to enhance public safety across the United States. So its autonomous security robots are designed for enclosed spaces like offices and hospitals and shopping centers. It has an outdoor model that controls external environments such as parking lots, and it's got a hemisphere model. It's a stationary unit for both indoor and outdoor use, providing surveillance and deterrence. It has a browser. The Security Operations Center has a browser-based interface for its clients, and it offers emergency communication system. It offers blue light towers and emergency call boxes integrated with AI and Internet of Things technology, used in schools, transportation hubs, and public spaces. The risk with Knightscope is while they have deployed robots across schools, corporate campuses, and logistic facilities, scaling the adoption remains a challenge. So they basically have to sell point to point to keep it moving. So they can't scale up, or they're currently experiencing challenges scaling in a logarithmic way. It has competition. It competes with traditional security services and emerging AI surveillance firm, and it's capital intensive. So they've got hardware manufacturing deployment requires significant upfront investment. So Knightscope is essentially a robotics and AI public safety company, combining autonomous patrol robots with emergency communication systems to help organizations safeguard places where people live, work, study, and visit. Its technology delivers real-time data, actionable intelligence, and forensic capabilities to augment human security teams. Its revenue in the third quarter of 2025 was $3.1 million. They beat estimates by 24%. They were up 24% year over year, which beat estimates. I'm not sure by how much. Its net loss is still reported, though it has narrowed compared to prior quarters, so they're trending well there. Nightscope is not yet profitable, but showing progress. The 229 year-over-year price target increase, as reported by Yahoo Finance, is being driven by analyst expectations that they will accelerate subscription revenue from autonomous security robots. So I'm close on this one, and we'll put it in the finals. They keep narrowing the profit losses each quarter, and the robots are just starting to gain some traction. And this stock isn't on many analyst radars, but they're going after something here and building something here that has utility, and so that's nice. So and then the last stock we're going to look at today is NeuroOne Medical Technologies. Its current price is 65 cents. Its target price is 225, so it's got a 238% upside target in the next 12 months, and 22 analysts are on this one. So that number of 22 is what captured my interest in including it in today's list. They develop and commercialize thin film electrode technology for brain and spinal applications, focusing on diagnostics and therapies for neurological disorders such as epilepsy, Parkinson's, dystonia, tremors, and chronic pain. They provide continuous brain monitoring, therapeutic applications, which is essentially electrodes for spinal cord stimulation, etc. And they have AI integration. What does it say here? Focuses on applying artificial intelligence to enhance data analysis from electrode recordings, improving diagnostic accuracy and treatment personalization. So what are the risks with this stock? They're still developing and scaling its technology with limited revenues. There are significant regulatory hurdles. The products must undergo FDA approvals and clinical trials before widespread adoption. They face competition from companies like Medtronic, Boston Scientific, and NeuroPace, and they have a high capital needs. As a small cap medical technology firm, they rely on funding to sustain R&D and commercialization. They are not yet profitable. And while the company has shown strong revenue growth and improving margins in 2025, it continues to report net losses as it scales its thin film electrode technology for neurological applications. Its revenue was $1.7 million in Q3 2025 with a 53.9% gross margin. Earnings per share is a negative 3 cents, which beat the analyst's expectation of negative 5 cents. This year-over-year price target is driven by analysts' expectations of accelerating revenue growth from its FDA-cleared thin film electrode products, expanding gross margins, and a strong pipeline of neurological applications. Let's see here. But that all said, I'm going to pass on it. They rely on getting things through the FDA. That kind of scares me. You may want to watch it. It sounds like, there's a lot of people that are interested in this. Maybe this is for you, but it's not for me, so I'm going to pass on it. Anyway, so that completes our analysis for today. We had 4 stocks make it into the finals: Resolve, Nightscope, IREN, and Recourse Systems. Now I'm going to look a little bit more closely at cash flow. IREN is the sustainable Bitcoin mining and AI infrastructure company. Again, it develops and operates large-scale data centers powered by renewable energy, primarily hydroelectricity, and has recently expanded into high-performance computing and AI cloud services. They have 10 to 12 months of cash and on hand of operating cash, and have 104% growth target. And the biggest thing about this is that it is profitable. And so for that reason, I'm putting it as a buy. And moving on to the next one, Resolve. Um, Again, they were the developed generative AI solutions for the retail and e-commerce sectors. They're the one that had that big contract with the third largest Mexican retail company. It has 6 to 7 months of operating cash. And although there is no indication of another IPO, which would dilute any purchases made now, or likely dilute them, their management is focused on scaling their operations and acquisitions to drive profitability. And so, what am I doing with this one? It says I'm going to put a little money into this one. Recore Systems, which develops AI-powered roadway intelligence, only has 2 months of operating cash and is currently unprofitable. I'm just going to stay away from that one. And same for Nightscope, which designs, manufactures, and deploys autonomous security robots. They have 5 to 6 months of operating cash and are unprofitable, so I'm going to pass on that one. So for this month, for my 2 paychecks in December, when I get paid, I'll take $200 out of my first paycheck, and I'll put $150 of that $200 towards IREN. That's the profitable company, and $50 towards Recore Systems, which is the unprofitable company in the retail system, in the retail market, trying to bring AI into retail. And then on the second paycheck, I will do the same thing. So by the end of the month, I'll have 2 different purchases. And one for IREN at a total of $300, because there will be 2 $150 purchases. And then on Recore Systems, there will be 2 $50 purchases. So let's close out the podcast. Let me bring up real quick here my purchase that I made already, just to let everybody know. I made this purchase on the 15th of December, and I purchased $150 worth of IREN Limited stock on a Robinhood app. That turned out to be, my purchase price was $40.14, and the number of shares was 3.736921. And I bought $50 worth of Recore Systems, also on 12/15, and my purchase price was $1.75 per stock, or per share, and so I ended up with 28.57 shares. This is on a spreadsheet. When I post this video to go live, I will, in the comments, I'll put the link to it there, everyone can see. And then on the 29th, I'm going to buy another $150 of IREN and another $50 of Recore. At the moment of this podcast, let me bring up, see what's happened because today is the 20th, so I made these purchases 5 days ago. They kind of took an immediate digger, but we're holding them for a year, so no need to panic. Let me see what Robinhood says these prices are. IREN is now $40.49, so it's up a little bit from when I purchased it. And Recore, the one that I purchased $50 worth, is down to $162, and I bought it at $175. So I've taken a little bit of a hit on Recore in 5 days, and I just got a few cents. I'm up by 35 cents on the IREN shares. So anyway, no big deal. Nothing to panic about. It is interesting to watch every day, but it's really pointless because we're holding for a year. So there you go. So that all said, let's close this out. Just so you know, I'm a Christian, and so I want to bless these buy decisions. Yes, it is okay to wish for good things, because we're going to do good things with the profits that I'm gonna make. At least that's my plan. So, dear Lord, please lead us to a life of joy that aligns with your plans for us. I'm grateful for all in my life and the entire universe. I ask your blessing on these stock picks, as I will endeavor to do good with any bounty that I harvest from them. in your Son's name, who died for our sins and created a path to everlasting life. Amen.